Right, this is Bloomberg Quint. In the market trap, we do have some amount of weakness seeping into our own Indian indices, especially given so much volatility in the global world markets, and based on that we've seen correction in the Nifty, which has come off by as much as 90 odd points. The Nifty now clearly below the mark of 10,700 and resistance building around 10,800 to 10,900 based on the kind of writing that you've seen in those calls. Among the gainers, we essentially had gains in IT companies such as Wipro, TCS, along with perhaps something like an Infosys. But on the losing end, what we're seeing is a lot of weakness in JSW Steel. Hero MotoCorp downgraded by Goldman Sachs. Indian Oil Corp seeing a lot of correction. Bajaj Auto, NTPC and Hindalco also declining in trade. The broader markets, the picture is not very different. In fact, we have one gainer for about two losers. On the NSE 500, the picture is completely different for the National Stock Exchange in general. We have two losers for one gainer. Emphasis does stand out in trade, advancing by 5%, along with ILFS Transportation, Heritage Foods, REC and Inox Leisure, among some others. On the losing end, SRF seeing a lot of volatility, and for the second straight day, declining on heavy volumes. Jubilant FoodWorks is the other curious one, down 7.2%. Avenue Supermarts down 6%, and both these are stocks which have seen which have been trader as well as investor favorites in the year of 2018. HEG, Dish TV India, All Cargo Logistics all losing out in trade. But on that note, let's bring in our markets editor Neeraj Shah to make sense of the markets and perhaps given his perspective. Neeraj, how are you reading cues here?
Difficult to say. I think the world markets are a lot better today, so don't quite know if that has some impact or some bearing on what we do tomorrow morning as well or no. But 3 days, some falls, fairly high volumes on the FNO side. It's expiry week, truncated, so no other negative cues, but for the fact that we are probably paying a bit of a catch up to what the world markets already have done and what we were seemingly resilient to. Right. I think Sanjeev was had to say that it's expiry led. Don't quite know that when that will pay out or no, but that's something you're going to watch out for. But every day, there's some other casualties. In today's session, maybe it was the auto names and two-wheeler names, and to an extent the steel names. Hitherto, it was IT by and large. Don't quite know if the heavyweights now start coming off. If they do, and then what happens. So I think if the HDFC twins, Reliance Industries, ITCs and HUL stay okay, then it's not a problem. But if they start cracking, then maybe, just maybe, some more pain points out here in the run-up to the expiry. Right. Let's wait and watch. Well,
let's wait and watch. Fair enough. We're going to keep track of some of those variables. Neeraj, thank you for coming in and getting us that perspective. But what about technicals? What levels should we watch out for? Do we go long or short? We have Hemen Kapadia once again just joining us to give us an idea on the same. Hemen, the Nifty is at around 10,663. Where do we go from here, and what levels would you keep an eye on?
A couple of levels. 10,665 was one, that's history. 10,645, 10,610. The last one is 10,550.
Right.
I have a feeling that there could be a little bit more pain left, but now after this fall, I wouldn't be ultra bearish. In fact, if it were to break 10,600 tomorrow, I'd probably stick my neck out and say I'd take a small long. Because I think 10,500 will be protected the settlement. Right. And we're still seeing 61 lakh OI Agam at 11,000. So that's out of the question. So I think closer to 10,550 or even closer to 10,600. I think either one can sell the 10,500 puts, right, or if they don't want to take that risk, buy the plain vanilla 10,700 call. I think it's a small risk worth taking. I wouldn't be too bearish at this point in time from here beyond 50 points.
Okay, and do you expect the Bank Nifty to move in tandem with the Nifty?
I think so. Maybe a little bit of a lag effect. Probably the Bank Nifty could move first. Right. And probably the Nifty could move first and the Bank Nifty would play catch up. But yeah, I wouldn't be too bearish after this hammering that we've seen. At least keeping in the settlement in mind.
Fair enough. Hey man, thank you for joining us and taking us through your views on the levels we need to keep an eye on. And with that, I'll move on and talk about one sector which has done reasonably well today, and that's the IT space, but specifically Infosys. Now, as we have been talking and discussing over the last 1 week, and this morning we had reports suggesting that Infosys will carry out a buyback. Well, it's due for a buyback. We all know that. And we we also know that its 1-year moratorium after its previous buyback comes to an end on the 27th of December. Anytime after that, we can expect the buyback announcement, given the company has already earmarked funds for this particular event. Now, as per expectations, we're keeping an eye and looking at projections of anywhere between 11,200 to 11,500 crores worth of buyback. And well, at least one broking firm puts the buyback amount to around 800 rupees per share. These are some of the expectations and projections that we are working with, and that's possibly the reason why we've seen strength in at least Infosys in today's day of trade, as we have in the previous trading session as well. So we'll be watching out for that. But perhaps the more interesting development towards the end of the trading session was with respect to Max India and Radiant Life along with KKR coming through to buy stake in it. And for that, we have Darshan Mehta who's joining us with the updates on the same. Darshan, what do you have for us?
Yeah, so it's a series of transactions. What was happening is what Max Healthcare will do is that it has two businesses. One of them is the hospital or the healthcare business, and the second is the allied business or the insurance or the investment business, which has investments in Antara Living or pretty much Max Bupa Life. So so both of them will be demerged. Now, once this happens, the Max Healthcare, which is the healthcare business, KKR Radiant will buy almost 49.7% stake from Life Healthcare of South Africa, and because of the merger, KKR Radiant will also demerge its healthcare business and merge with it. And because of this reverse merger that will happen, Radiant obviously gets a backdoor listing into the Indian exchanges, and that part KKR will have a 51% stake in the company. So that's the first part in which the healthcare business will be separate. So what will also happen is the fact that the investment business will be separate. So if you have 5 shares in Max Healthcare at this point of time, till the time the record date happens, you will get 1 share in the new entity that will be there, and both these entities will be listed separately. So that's the entire transaction as such.
Fair enough. Darshan, thank you for taking us through those details. It's just a tad well complex, but if we can get through the details and eventually get to the structure of the deal, well, yeah, I guess that simplifies things. But with that and on that note, it's a wrap on the markets, but lots more lined up. Stay tuned to Bloomberg Quint and have a very Merry Christmas.